Hello and welcome. You're watching Let's Talk Business. I'm Vedant Agarwal. Our top story is the Israel-Hamas war and its impact. Well, as rockets streaked across the Israeli sky, the impact on crude oil prices is something that's visible. The war has reignited geopolitical tensions, stoking inflationary concerns as well. Oil prices have reversed their recent fall and jumped over 5%. BQ Prime spoke to David Lennox and Vandana Hari to understand the impact of the war on crude prices.
Look, not that long ago, we were sitting for Brent with 95 to 90. We thought it might touch 100, but wouldn't stay there, that it would correct back. It didn't even get to $100 in the recent strong rally that we've seen. We don't think with this rally that it's probably going to do the same thing. We're going to keep our 95 to 90 barrel for Brent and just slightly below that between about 92 and 87 for WTI. We're not looking for a significant rally out of all of this unless we see some action against Iran. So look, overall, we think the news is now probably just going to be a matter of playing through, unfortunately, as we see this conflict wind out.
India has a very important voice on the world stage now. Just 2 weeks ago at the ADIPEC conference in Abu Dhabi, we had the Indian oil minister convey very, very clearly to his counterparts in the OPEC plus producing countries that Indian consumers' pain point is around $80 per barrel crude. Now, that was, of course, coming days after Brent had been around 97, which is clearly, quite debilitating for from the perspective of inflation, as well as the drain on the exchequer as India imports more than 80% of its crude. So, look, I think the voice is being heard in the Middle East. And I think the Middle East is also paying very close attention to the other steps that India is taking to reduce its dependence on oil, right? So to go more into renewables, into biofuels and so on. So all of this is being very closely watched. I do feel that despite the very hawkish rhetoric that tends to come out from Saudi Arabia or other Middle Eastern oil producers, I think they will keep their ear very close to the ground on, the more price-sensitive economies, which are now their biggest markets and biggest growing markets. They cannot ignore it.
And well, what's most concerning is that it's the central hub of global energy that is at war. And India is the third largest importer of oil and it's closely monitoring the situation. But listen in to what Union Minister Hardeep Singh Puri had to say.
India will handle it with maturity. I mean, the Indian statement, the Honorable Prime Minister's statement is very clear. I'm not going to go into the security and other issues. Insofar as energy is concerned, let us be absolutely clear that the place where the action is taking place is in many respects, the center of the global energy is taking place. So we will watch very carefully, and I think as we go along, we will navigate our way through this. There's no issue, but I was merely making a point that these kind of uncertainties only encourage people to move into sustainable, cleaner fuels, and I cited the Global Biofuels Alliance as an example.
Well, that's what he had to say as far as the energy concerns are, concerned. But now, what about the defence sector? Will the war have an impact on India's defence sector? Well, BQ Prime spoke to Paras Defence's Amit Mahajan to assess the impact. Listen in.
Israel is fully self-sufficient when it comes to defence technologies. They are not dependent on any country to fuel them with any of the technologies. So any conflict in that zone will not create a pull from any of the countries when it comes to business. Business will go as it is. Israel will take some time, or maybe a week or 10 days is what it will take for them to, but that happens. Israel has a lot of holidays as well. So these kind of delays won't have any impact on the current business, but it will neither have a positive impact according to me, because Israel is self-sufficient when it comes to this. They are not dependent. India, it's not that India needs to supply certain things for them to overcome any conflict.
So, well, that was a take of the management of Paras Defence. You can watch the entire conversation on bqprime.com. Catch all the action in the broader markets arena and also other news every day at 11 a.m. on Stocks in Focus only on BQ Prime. But now fear of an escalating Israel-Hamas war gripped the Dalal Street as well. Sensex and Nifty fell the most in over a week. Banks, media and metal sectors dragged the indices. Hiral Dadia with a wrap of all the market action.
Domestic markets actually witnessed selling pressure in today's session, and this is taking cues from the global markets as well. Clearly, if you talk about the Israel war as well, that is something which is having an impact, and you can see that in the way crude has spiked as well as the way dollar index has been moving. You have Nifty, which ended near the 19,500 mark, whereas it hit a low of 19,480 in trade. It was mainly HDFC Bank as well as Reliance Industries that were the major drags in today's session. From a sectoral perspective, all the sectors ended in the red, and it was the PSU banking index which was the top losing sector. And you had Bank Nifty, which actually underperformed the benchmark indices in trade. Taking into consideration the broader markets as well in today's session, it was underperforming the benchmark indices, was down in that range of 1 to 1.5%. And the breadth was absolutely in favor of the bears. Let's quickly look at the top gainers today. So it was the IT pack, which was the top gainer. HCL Tech, TCS, both of these counters saw some strong gains, and TCS ahead of the numbers as well as the buyback announcement that could be expected. You had on the losing end, Adani Ports, that was under pressure on the back of the Israel impact, but they have come out with a clarification that the port contributes nearly 3% overall. Hero Moto, Delhi police has lodged a FIR against Pawan Munjal with regards to fake billing case, and that was under pressure. BPCL, M&M as well as HDFC Life were also under pressure. Let's quickly look at the newsmakers. National Fertilizers, LIC has diluted stake, the stock was under pressure. Rail Vikas Nigam on the back of LOA was up in trade. Jupiter Hospital slumped after Q2 numbers. Kernix Microsystems was another one. Vascon Engineers again got a LOI. Defense stocks like Idea Forge, Cochin Shipyard, Mazgon, etc. declined in trade. In fact, Mazgon, the IPO lock-in has ended and the stock was down 3%. Paint and tire companies also corrected on the back of higher crude prices. You had Keynes Technologies, which surged in trade on the back of an order on the back of the Telangana government plan. MCX as well as life insurance companies were in focus. So overall, stock-specific action is what we've seen, but clearly the pressure has continued in today's session as well. Back to you.
So Hiral there with all those updates and the impact of the war on the markets. But in other news, the earnings season is round the corner. How will the Nifty companies fare in the second quarter? Well, Motilal Oswal's Gautam Duggad expects a 21% earnings growth this time around. Listen.
We are expecting a very healthy quarter. First quarter we had seen close to 30% earnings growth for Nifty and about 18% without OMC. We are seeing something similar this time around as well. 21% earnings growth for Nifty and 15% ex of OMC. For our broader coverage universe, we are penciling in a 40% earnings growth, largely because of a very sharp upswing in OMC's profits on a YOY basis. If you keep aside OMCs, then even for our coverage universe, we are talking about a 20% plus earnings growth. And this is a quarter where margin expansion will be very strong on a YOY basis across sectors. Auto, cement, consumer, metals, oil and gas. There's a few sectors where margin expansion will be very strong. We are expecting close to 250 to 300 bps of a margin expansion at operating level for different set of aggregates, depending on which one you look at. So while the top line growth is expected to be a bit tepid, given what is happening and given the fact that a lot of the inflation is in the base now, so we are talking about 6 to 7% top line growth for both our coverage and about 8-9% for Nifty. But the EBITDA growth will be in the range of 17-18%.
So interesting perspective there on the earnings season. That's all that we have on this edition of Let's Talk Business. There's more on the other side.